as governments go bankrupt, they try the most crazy things, which is what we've just been talking about. And what happens almost every time in these things is you have a capital rotation, and the capital is already, I believe, has already begun rotating. We can see that in gold, which has already outperformed the S&P for 2 solid years running. The catch-up now is coming with silver and platinum, which are all running like the police are after it. The gold miners, which didn't do anything for some time, are now coming on board. We're moving into this cycle.
You're watching CapitalCosm. My name is Danny. It is September 30th, 2025, and my guest today is the publisher of the Capitalist Exploits Insider newsletter, my favorite newsletter. It's Chris Macintosh. Thanks for coming on, my friend.
Very, very interesting times. All good. Yeah, so we were just talking before we jumped on here, and we're talking about a couple of topics, concentration and capital risk, which I figured we could talk about today because I think it's an opportune time. And there was a quote that I wanted to put out before we kind of dig into the topic of concentration of risk. A quote from JP Morgan's analyst, JP Morgan analyst. So I don't know if you saw the Oracle deal with OpenAI. So I'll read I'll just pull it up here. I'll read the quote because we were talking about this internally at Lenorki and just scratching our heads saying like, hang on a second, none of this makes any sense. So Oracle stock, here's the quote. Oracle stock jumped 25% after being promised $60 billion a year from OpenAI. An amount of money OpenAI doesn't have and hasn't earned yet to provide cloud computing facilities that Oracle hasn't yet built, and which will require 4.5 gigawatts of power, the equivalent of 2.25 Hoover dams or 4 nuclear power plants, as well as increasing borrowing by Oracle, whose debt to equity ratio is already 500% compared to Amazon's 50%, 30% for Microsoft, and even less of Meta and Google. In other words, the tech capital cycle may be about to change. That was the quote. So you've got this deal that's gone down, and it's a fraud, is what it is. It's me.
Fraud on top of fraud.
Yeah, we can do a deal. Let's do a deal between CapitalCosm and Capitalist Exploits, and you will promise to deliver, I don't know, 1 billion viewers to a podcast, and I will promise to pay you $500 million for that. Like, it's I don't have the $500 million and you don't have 1 billion viewers, right? But we both have listed equities, and off we go, and the market goes, yippee, I love Danny, I love Chris, let's bid up the stock. And Larry Ellison, who's the founder and CEO of Oracle, became the richest man in the world on the back of that deal, making over $1 billion or something like that, or more than that. I can't remember what the price was, but it doesn't matter. It's all fictional fraud. It's nonsense. So that's an interesting dynamic. But what you find at the top of any mania or peak of those types of things, that's an egregious one from companies that are, shall we say, valid companies. What you'll find often are the companies in the unknown companies that come out, and they're actual just total frauds. And you find more of them at the peak of these cycles. And the reason that you find more of them is because the due diligence that's done by investors to invest is inadequate at these times, because there's FOMO, there's social pressure, and there's just human emotion that clouds the judgment of people to the extent that they invest in things that they wouldn't otherwise invest into.
And by definition, you have a higher quantity of investors out there, but by that same token, you also have a lower quality of investors. So the fact that you're able to attract all of these investors or buyers or whatever you want to call them implies that you're scraping from the very bottom of the barrel just to find anyone with a swing and what to come buy into the stock market. So when that happens, the average knowledge and due diligence of the whole goes down.
Yeah, and you make an interesting point insofar as you have a quantity over quality. What's interesting in this cycle is that dynamic has largely been, how do I put this? Almost like systematized. What I mean by that is you have these passive capital flows. So most people don't understand that they're a participant to this. And they don't understand that because they're working every day and they get to the end of the month and some portion of their funds goes to a pension plan, for example. And the pension plan is run by Fidelity or BlackRock or whoever it is that's running their particular money. And they're all very much the same. And what they do is they just put it into these passive algorithmic trading pools, which then automatically get distributed into some version of the S&P 500 or the NASDAQ. And because these companies are large, have a disproportionate weighting in the S&P 500 and an increasingly disproportionate weighting, their capital simply goes into those. So they're investing into it every single month without even, if you asked your average person on the street what they thought of Oracle or Nvidia or something, they'd probably look at you with a squint in their eye like, what are you talking about? Not understanding that they're actually invested into it. So there's this concentration of capital and lack of quality, largely because the individual doesn't know it's taking place, and secondly because the institutions that are running it now, it's largely been handed over to a black box system. And the machinations for the way Wall Street works is aggregation of capital, not return, based on performance. So, for example, my business at Glenorchy, we run a performance-based model. Essentially, we make money, then we make, like, if we make money for our clients, we make money. We get a share of the profits over and above a benchmark level. The standard old active management hedge fund payment method. That is very different to aggregated capital, whereby you get maybe 50 basis points or 85 basis points with no performance fee. And the incentive then is to simply just aggregate capital. And it's easier to aggregate capital into things that have previously worked because people are happy with that, right? They're like, well, what's happened in the last month? And you can, when you're selling your book, and if you're a pinstriped suit in Wall Street selling to Joe Blow on the street via pension schemes, then you can point to what's worked in the last 6-12 months or whatever. So it's not necessarily even that these individuals understand the risk. Most of them don't. They're marketing individuals. They don't. You can sit down and have a conversation with them, despite the fact they might have done a finance degree. They really don't understand any of the stuff we're talking about. So they're just a marketing tool. So anyway, that is how we get to the situation that we're in today. We have this, heavy weighting within a sector or an asset class. Geographic weighting is extreme now in the US. And it's global, as we were mentioning before, because you have the ability for pretty much anybody on the planet to participate in this as a consequence of cross-border lending, access to various trading platforms. I mean, you could be sitting in Asia and you can participate in what's happening on the New York Stock Exchange without any concerns at all. And so that's quite different to 100 years ago. And we saw some of that with, for example, the 2008 crisis. We also saw some of that with the Asian crisis. The Asian crisis took place in Asia, but it was a lot of Western capital that participated in that. So you have this sort of contagion effect through lending, trading, and shared investment schemes and ETF and pools investments and so on and so forth, all of whom can and do often participate in concentration of capital risk. And so today we've got a similar situation. None of this stuff really makes any sense, which is not to say it can't go higher, but the Mag 7 now accounts for roughly about 25% of the S&P's capital spending. And there's certain AI and specific names that have gone up 200, 300% since just like, when did ChatGPT come out?
2022.
November 22, I think it was.
Yep.
So like, what you've got within that dynamic is like the S&P's gone up probably about 50, 60% since 22, but the AI names have gone up, 200% sort of thing, which has been how that 60% has gone up, because it's not the vast majority of stocks in the S&P 500 have done nothing at all. People don't realize that. They're like, oh, the S&P's up. It's kind of true. It's true, but there's a basket of stocks in the S&P 500 that have pulled the entire index up. And that basket of stocks are the ones where they have this concentration of capital risk. And it's becoming ever more concentrated on a daily basis. And now we're watching the frauds unfolding. So I don't know how far we're off from this entire thing collapsing, but I'm assured that it will.
Yeah, you make a very interesting point about the concentration of capital, because it's all of this stored potential energy ready to erupt, because it's all being placed into one place. You can kind of think of it as like, say you've got like a big cash hoarding or whatever, and you put it all in one central location in your house. Now, if the house burns down, your life savings go up in flames. So it's kind of that same idea that you have so many people crowded into the market, all trading into the same sectors, the same places. And if something were to happen to that place, then the ramifications would be widespread, because by definition, everyone is involved in it. And then,
well, I mean, if we go back, we can look at, say, the 1990s and the Japanese banking crisis, right? So you had a concentration of real estate lending across Japanese banks. That's transpired into decade-long stagnation in the Japanese markets. And that bust affected much of the world. However, then what was the next major one? Probably 98, long-term capital management. You had like a single hedge fund, which literally triggered a systemic collapse. That affected a lot of banks globally, because they were all participating either directly or indirectly in that. And then, of course, we had the 08 crisis. Each and every one of these has had a broader footprint, right? This one now, I think, is based on the capital that's invested into this now, will have the broadest impact of all those that we've seen, based again purely on the allocation of capital and the distribution, right? Like, everybody's involved in this to some degree,
right.
So and then you have to ask yourself the question, what's going to be the consequences? I mean, not just people losing money, that's sort of an obvious one, but what do regulators, for example, do? Because there's always the regulators are always too late and too slow, but they'll come out afterwards and they'll say, oh, well, we need to fix that. We need to do X, Y, Z to stop this from happening again. So what will they do? I don't know. But, it's entirely possible that they restrict international capital flows um,
Which
to
has been
some
done
degree.
before. Which has been done before. You were telling me about this before we hit record in Thailand.
Yeah. So in the Asian crisis, of course, they determined that a lot of the risk was, or the problems came about as a consequence of capital pouring into the real estate market. So everybody could, and that was what was happening, right? So you had real estate developers basically that were leveraged up, and everybody was chasing the Asian tigers. Coming out of the back of that, now today, you and I can't invest in Thai real estate in the same way. You can't own land. You can own like a condo within a building that's 51% owned by Thais and all sorts of other things. So there's sort of ways that you can participate, but it's not as easy or clear cut as it was prior. And that's as a consequence of the crash. So they were like, oh, we got to fix this. We can't have, people coming in and bidding up all the land and creating bubbles and so on and so forth. So you often get measures that come in after the crash, which are thought to solve the problem. Whether they do or don't, time lands up telling you the story to that. But almost certainly this will have something of that nature. My concern would be that you have, like this is because it's international, it's cross border, and then of course we've got all these other things taking place, such as CBDCs coming in. You've seen what's happening in Britain, where you won't be able to work without a digital ID, all this kind of stuff. The ability to turn capital on and off, as is determined by the communist globalist elites, is going to be extremely easy. Now, they will probably determine that that's a good thing because, well, they can stop any risks as they see them because they are all seeing and all powerful, which never works. Again, you just have a constant. You're taking, well, we've just talked about a concentration of capital, which causes a bust or causes problems. What they're taking is concentration of human intellect, concentrating it into a few powerful elites who believe they have all the answers and thinking somehow that they're going to solve all the problems. And that never works. Communism never works. But I can see that that's certainly their objective anyway, whether we have a crash or not. But certainly that would be an opportunity for them to turn around and say, see, this is what we have to do. And unfortunately, the masses in the chaos, clinging and desperate for an answer, will probably like the idea.
Yeah, and one of the big issues with these central planners is that even if they were, some of the smartest people on the planet, you can be the smartest person in the room, but you're not going to be smarter than the room. No matter how smart you are, you're not going to outperform 7 billion nodes all acting in their own self-interest to come up with an emergent solution. Like it's just unfeasible.
No, you're bang on. You're dead right. But that doesn't stop human beings from continuing to attempt to do the same thing over and over again throughout humanity. And they're definitely trying to do that right now. It's a concentration. They're trying to bring everything into one system such that they can control that system.
Is it one global?
Where you
is it
play,
one global?
how you spend your money.
Yeah, is it one global elite or is it multiple factions of global elites that are trying to implement this in their own unique way?
I don't really know. I mean, I liken it probably to a cabal of criminals, robbing a bank. They might all be part of the same criminal gang at some point, but criminals being criminals, they'll backstab each other along the way. You've seen the film The Joker, where
Yep.
where they're all robbing the bank, and one by one he just gets. Some of them have to eliminate the other ones, and in the end he just takes all the money and eliminates them all. Um, so whether there's a group or what, there's different groups, but they're all vying for a similar thing. You've got, and I don't know if there's collusion between them or not, but you've got your WEF type crowd in the EU controlling Brussels. They've made this very clear for a long, long time what they're after. And then you've got, you've got the CCP that have already implemented much of the same types of machinations in China. Are they in cahoots with WF? Maybe to some sort of degree, but I think they've got their own interests. And then you've got in the US, you've got the likes of the Palantirs and who are clearly influential, if nothing else, within the US government. You can just trace the path of Peter Thiel and J.D. Vance, who is under Peter Thiel all the way through, and he wouldn't be in existence if it wasn't for Peter Thiel. So they have, very similar views. Now, are they the same as the crowd, the WF? I kind of think not. I think they have their own, the little Silicon Valley crowd that have their own desires. But technology is when you have powerful technology, it's sort of like there's going to be a competition to actually take that and use it. And so I think there's competing interests to that degree, but the technology is that they're looking to use is going to be used against us. That seems to be the overwhelming desire. Of course, they're lying to us about how it's always for safety and for
our own good and for the greater good and the public safety and all this other jazz
and ease. You're sold into the ease of something, which is true. It is easy if you were to pay for groceries with your phone as opposed to pulling out paper bills and coins and everything else. That's absolutely true. So there's sold into existence with ease, and then you're promised safety with it. And every time you're promised safety, you know that it's never about that. The irony of what Starmer in the UK is talking about, he was on, I think, BBC or something. I saw an interview, and to her credit, the interviewer was asking him, like, this doesn't really make sense. Why is this going to make how's it going to stop immigration? Because he's saying, well, it's going to stop illegal workers and illegal immigration, despite the fact they're the ones bringing these boatloads of people in. But let's just assume that wasn't the case. She's saying, well, they're illegal now. Like, they don't care about the laws. So if you implement and you say you have to have some digital ID to work, they don't have an ID to work now. Why would they care about a digital one? Which is so valid. And he just flopped around. He had no answer to the question. He was like, well, we have to make sure. We just have to make sure. And it's for everyone's safety. And it's like, we're going to do this. And yeah, it was pathetic. He's a pathetic individual, but he just kept hammering the point of it's for safety and for, so they're going to push it through regardless whether people like it or not. I keep hoping that people will rise up, but for the most part, people are fast asleep.
Are they going to come after every last rat on the ship, or if you're rich enough or wealthy enough, will someone like that be able to kind of sidestep that system?
I don't think you sidestep it. No.
They're going to come for all of us.
If you were in China when Mao started his purge, at the beginning you were like, oh yeah, I'm wealthy, you sidestepped it for a little bit. But ultimately, no. Every single person got captured. The only way out, if there was a way out, was to be part of that system, to be part of that elite communist party, part of the implementers. And even those guys ultimately lost I mean, famously, there was, I think it was when Deng Xiaoping sent a delegation to Europe, and these guys were like, looked around, and they're like, the average person was way wealthier than they were, and they were the richest in China, and they're like, we've got to do something about this. There's a famous quote from him about that and story about it. So even though those guys were quote unquote the richest in the country, they were still by international standards poor. Everybody gets poor, and so and this is where I think wealthy people kind of they've always been insulated by their wealth, and they think that they'll continue to be. I don't see that being true at all. I don't see it being true at all. If you look at some of the influential wealthy people, or here's two examples. Okay, so you got an influential guy like Nigel Farage. And this was way back when he got debanked. Okay, that's just a debanking. That was before you had any digital IDs. That was before you had hate speech laws. That was before a whole host of things existed. So there's that as an example. And then you've got Jack Ma, billionaire. He said a few things he shouldn't have said, according to the CCP, and he just disappeared.
He was gone for like a year, wasn't he?
Yeah. Apparently he went to sort of a re-education camp, had a lot of his wealth stripped from him, etc., etc. So there's a billionaire who presumably had access to the wealth of a billionaire and the ability to that comes with that. And again, that was pre all of this technology that exists today. Biometrics everywhere. I just got back from a long trip, and like everything now seems to be pretty much biometrics at airports. You tie that into your banking and your health system, your credit system, your jobs, your businesses. And if your business has one little transgression, the entire thing can be captured. And that transgression can be as simple as the taxman decided that you didn't pay enough, and maybe you did, but they cock up all the time because they're bureaucrats, and you can have a dispute over that, and the next thing you know, your bank accounts are all frozen. George Gammon was talking about this the other day on a podcast with a friend of mine. Woke up one morning, bank account had 600 grand in it. It was just zero. He's like, what? And contacted the bank, and they were like, no, we just froze your account because there's some transactions that we don't think are valid or concerning. And it wasn't even an account that was a transactional account. He just used it as an account that he was just dumping cash into every few months. So fortunately, he didn't need it for OPEX for the business, but it took him weeks just to prove that the money was his and was okay for them to give him the money back. And sometimes that doesn't happen at all. So your money is not your money anymore. Yeah, that's true now without all this digital system in place. So what you're also seeing there is a concentration of technological risk too, right? Think about concentration of risk, which was our topic at the beginning, which is that this is all concentrated into one system. They think they have all the answers because they're going to have some AI bot being able to manage all of this. The AI bot transplanting, if you will, humans. And it's not going to work.
Yeah. And even these new large reasoning models, not large language models, these are a higher step above the LLMs that they've been rolling out. I believe DeepSeek is a large reasoning model. And there's a study published not too long ago, maybe like a month or so ago, where they ran, they compared various LRMs with each other. And no matter how much computing you put into this thing, there is a point of diminishing returns. Like it's somewhere around 120 IQ, 110 IQ. So they're not seeing this.
They just collapse. They
Yeah.
get to a point and they just collapse.
Yep. So if they're putting all of their eggs into this AI story, and they're just now hitting this point of diminishing returns, this inflection point, if you will. I mean, it goes back to the theme of what we were talking about initially. Had it not been for the AI bubble in 2022, where would the market be today? And if it is not the case that AI will be the story that they anticipated it to be, at least to the extent that they anticipated it to be in the coming years ahead, in the near term, long term, different story, but near term, it does appear that we're heading into a slowdown when it comes to progress in that area. So, so many different problems involved with this thing, and then you've got you've got the feedback loop. You've got this recursion problem in AI too, where initially it reads from a huge vault of written text from all over human history, but as time goes on, it begins reading its own output. And so it becomes a case of garbage in, garbage out. So a small case of garbage being pumped out of AI and being re-fed into the system, into the models, would create somewhat of a snowballing effect to the remainder of its output. And so much of the internet now is being flooded by AI output that's being fed into the existing models today. And then
I wonder if this is a bit of a side topic, but in this world where you're inundated now with volume of information or volume of content, and of course with AI, there's an ability to create even more. So, like we sit down and we write the insider issue, and we write it. But I also understand that you could have ChatGPT or any number of things being written, and I see stuff on Substack. I can pretty accurately determine now what's been written by AI and what's not. It's got like a certain rhythm and tone to it. But now instead of writing something maybe every 2 weeks, you could pump one out every week or every day.
mm-hmm.
Why not? Because it takes seconds, So what you're seeing is now this volume, this like vomiting out of just regurgitated stuff. And I think what people need to understand is that AI doesn't do anything. It's a data aggregation tool, right? It pulls in data, it recategorizes it, and then it spits it back out based on the prompts that you give it. And it's exceptional. It is already changing the world, and I anticipate it'll continue to. But there's this weird there's like a narrative around it that it's going to take over. Now, part of that's fear, but I think that part of that's actually driven, and it's that AI will become sentient. And I'm like, I just don't buy that. It'll never become sentient. It can't gain consciousness. It can't actually think. It's a library. It's like, in the old days, you had a physical library. You go in and you go, oh, I want a book on sports. I want one on tennis. And you go to the tennis section and you find your book and everything else. That's all it is. Far more sophisticated, in the instant, in seconds. And it can take all of the content of that tennis book and it can repurpose it to you based on your prompts. In fact, it can take that tennis book as well as 10 other tennis books and do the same thing, right? And then it might even take a book that you say, well, take that information and now contrast that with, I don't know, rowing, as a sport. And it can do all of these things based on prompts. But what it's doing is it's going into the library, searching, retrieving, categorizing that information, and then giving it back to you based on the prompts that you give it. That's not sentient. It never will be. So I wondered to myself, what's the idea behind getting people to believe that it's sentient? And then I look and I think, okay, what happened with COVID? Well, you had this trust the science. That was it's the new God, back in when you had the Catholic Church basically ruling the world. You remember that prior to the written material, it was the priests. You had to go to the priests, and the priests would tell you what the Bible said, and they would interpret it for you, which is, of course, is why Martin Luther King wrote his theses, and part of that was really as a consequence of the printing press coming along. They didn't want people to read the Bible. They were like, we are the distributors of the truth. Don't question us. And the moment that people could start thinking for themselves, they started questioning them. We've seen, so science is basically the new god of the Western world, right? You can't debate science. Don't argue with science. That's fine if science is in its true form, in that it's a questioning. Science itself is always to question.
It's a research mechanism.
We saw that with the COVID situation, is that you couldn't question it. The moment you question it, you are now questioning the science. And what I see with AI is it's just simply another version of that. It's like, sit down, you peasant. Don't question the priesthood of the science or the artificial intelligence. You can't possibly be smarter, Danny, than AI, right? Who do you think you are?
Well, part of it is also desperation, right? Because they really do need this to work, because they've given up on their green energy scam to pump. I mean, they've pretty much given up on the green energy thing. I mean, they're pumping everything that they can into AI data centers now. They've forgotten coal, natural gas, what you name it, they're putting into AI. It's as if they need it to happen, because I mean, you're kind of heading into this intersection between a war cycle, a revolutionary cycle. You have resource scarcities. You have all of these things ongoing at the same time that they need. It's a race to get AI sentient to be able to take over the system before it collapses.
I think you're right. You made a pertinent point there. I've never really thought of it like that. I've thought of them as sort of different agendas run by the same sorts of globalist individuals. But yeah, I mean, it's as they've had one pillar of their narrative sort of collapse on them, which is the whole energy scam, they're pushing for the others. Because you had the COVID thing, which I think they wanted every person on the planet to be vaccinated and to get that digital vaccine certificates in place, and they failed in that. They sort of got it a little bit in some places, but they largely failed. Then they tried the green energy scam, and that's now in collapse mode. And this is the next iteration of that, and they're using AI as this it's like the new god. It's the new science, and I guess because it's actually so powerful, I'm not discounting the fact that it is an incredible technology and it's powerful. But at its core, it's an aggregation of data. Like I said, it's not sentient. It's not. It doesn't think.
It's glorified pattern recognition. It's looking for patterns within the corpus of data and spitting it out based on your prompt.
It can't create anything new. So actually, if you think about it, if human beings stopped all creative thought today and we said we're handing it over to AI, nothing new will be created, because the library can't create something new. It can only sift through the library and regurgitate what's in the library in different forms. And you could have thousands of different forms, but that's not anything new. It's simply a regurgitation of what exists in a different form. That's completely different to actual creativity.
Lacks
the things that
novelty.
are novel, creative, whether it be artwork or whether it be the written word, whether it be an invention of some new, like if AI existed before the motor car existed, the motor car wouldn't have come into being. AI wouldn't have dreamt it up. We were all running around on horses and carriages. If we'd stopped at that point and said AI will run everything, there would not be any cars, because it couldn't conceive of it. So
the way you put it, Chris, it kind of sounds like AI is more of a hamper than a
It's a
tool for
tool. It's
progress.
a useful tool, and it's very useful,
But
but
if
it
it
is.
stifles creativity and imagination, in a way, you could make the argument that it'll hamper human innovation in the long term.
I think it has the ability to hamper human innovation if human beings subjugate themselves to it and allow themselves to think that somehow it's better than they are. So if you think about something as simple as like a spreadsheet, right? You and I, if we were going to do bookkeeping for our business, in the old days, you write it down in your ledgers and on a piece of paper. Then along came computerization, and we could go and put that information into a spreadsheet. We could do it in much, much faster, right? Let's say you had to table all your expenses and your income and your business. Like you'd had to write it all down. Firstly, writing it down takes a long time. And then you'd go, if you didn't have a calculator, pre-calculator time, you'd have to actually add it all up, right? Make sure you maybe do it twice to make sure you got it right.
Yeah.
Like everything took long. Then you had the calculator, boom, 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 much faster. Then we had a spreadsheet, plug it in, zip, you know, done. So did that help or hinder us? It helped us because we used it as a tool, but we never at any point sat there and said, this will take over. The spreadsheets are going to take over. Like, no, they're just spreadsheets. They're a tool. They're useful and they can help us do things in a much faster fashion. Just like a motor car can get us there faster than a horse or a bicycle. But it's just a motor car. It requires input. AI is just a tool. It still requires input.
Yeah. I guess
It
the part that
requires,
worries me the most is that if you look at like some of the reporting that comes from like some of the Gen Zers out there and the Gen Alphas, the young demographics, you're getting reports out of like from college professors saying that my kids cannot write to save their life. Like they can't even write papers anymore. They've lost that ability because of generative AI.
yeah. Yeah. I mean, I think that's probably true. I don't know where it all goes, Danny. I mean, I know when I was at primary school, we had to do calligraphy.
Hmm.
Yeah, these calligraphy pens. Not everybody did them. I think you had to take a class on it, but you would learn how to write beautiful cursive writing with a calligraphy pen. So writing now, very few people write, just actual writing. And there's a process to that, which is that sort of kinetic touch with Word, which is apparently very good for your brain. It's better than typing. The same is true when you read. Like if you read on a digital screen, it's quite different to reading a book. I always like physical books, like the actual
Right.
tangible paper and the ink is to me much. I like it more, and I think most people do. But so I think there's some of those things can be lost. We could argue that's just the advance of humankind, and just like we're no longer running around in the bush with, um, scrubbing for berries. Life is better off. Maybe that's an argument to be had. But yeah, there's some of these talents I think that get lost, but then at the same time, I think they become more valuable. Right? Anything in scarcity becomes valuable. So, for example, I have a suspicion, and to some degree, this has actually worked in the business. So, if I go back to when I started CapEx, you had all of these call centers. You could have a call center in the Philippines or any of these places, and a lot of the publishing businesses were using them, right? Because they're very cheap, and you could have your front end of your business could be some call center, and they could take calls and they could market and sell for you and da 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 da. Those are all going to be replaced by AI. But what I found with them was that they were almost like they were automated, even though they were human beings. You basically gave them prompts, right? So you had some chick in the Philippines and you told her, this is the questions you'll be asked, and these are the way you answer these questions. Someone might look to sign up for the insider publication. They might ask these questions. This is how you answer it. So you got a human being, but the human being didn't really understand much. They didn't understand the business. They were just understood that there was this list of questions, basically prompts, right? And they knew how to answer them. I chose not to do that and paid way more to have human beings who understood my business that are in that front office relationship. And it's worked well because it's a much better experience. Well, that's what clients tell me. And I think the same thing is likely to transpire now. You will be able to see that difference. For example, let's say we went out to dinner. We could go out to dinner and have, and I just saw this recently, like these robots that come and deliver your food. Okay. so you got there was a robot. I didn't go into the restaurant, but I saw it. I thought it was fascinating. Robot going around cleaning, vacuum cleaner thing, or sweeping. It was a tiled floor. So that's cleaning the floor. Then there's a robot taking orders, and people are tapping their phones, and off it goes, and it brings the food and all. And I thought, okay, that's, to some degree, we might do that as an experience because it's novel, but I don't want to do that all the time. I will much prefer a human touch, an individual that I can talk to who comes and says, "What would you like, Danny?" "Oh, you'd like the pad thai today." "Okay, here we go." And I think we will pay for that human touch experience, especially in a world where we're inundated with the non-human touch experience. We're going to crave it, and there'll be a value to that.
Yeah, and it'll come back in style. So, Chris, let's go ahead and take this home. How can, given all of these changes coming down the road, how can the average investor protect themselves? How can they be the most prepared that they can be? And how do you guys over at Insider tackle these questions?
Well, look, I think we're just going through a cycle of history. That cycle of history is one where you have unsustainable debts. As governments go bankrupt, they try the most crazy things, which is what we've just been talking about. And what happens almost every time in these things is you have a capital rotation, and the capital is already, I believe, has already begun rotating. We can see that in gold, which has already outperformed the S&P for 2 solid years running. The catch up now is coming with silver and platinum, which are all running like the police are after it. The gold miners, which didn't do anything for some time, are now coming on board. We're moving into the cycle. We are of the belief that we'll have things like energy really move, and that's very, very, very depressed. And so it's a loss of faith in the paper monies that governments issue. So bonds are a terrible place to be. As bonds collapse and as currencies essentially get devalued against true and tried, tested hard assets, which incidentally are still at historical lows, those are in our belief, the places to be. So we have a basket of roughly 10 sectors, globally diversified, where we are seeking value in largely those sorts of asset classes, and that's, in our belief, the best way to do this. So it's you want to be not concentrated in any one jurisdiction. So I go back to concentration of capital. You want to be in the sectors that are unloved, that are primed for that capital rotation. Again, some of them already begun moving. That they're gold is the canary in the gold mine, and for the entire space, I believe. So that's what we do. That's what our portfolio looks like. We talk about that on a regular basis. We look for the companies in those particular sectors and in different geographies that'll allow us to have that geographical and sector diversification, while frankly trying to keep the hell away from the risks that we see, which are pretty extreme.
Yeah, well, I've made it no secret. I've let everyone know that I have been a member of Capital Exploits Insider, your newsletter, for quite some time now, since 2020, and have enjoyed the returns and a lot of the gains that you guys have, cued me into with the newsletter. So I'm always excited to encourage my audience to consider joining the newsletter as well. We have a special discount link down below. By clicking on the discount link, you get access to Chris Macintosh's stock picks from both an asymmetric perspective as well as a capital gains portfolio and a dividends portfolio. You get weekly market write-ups and analysis, monthly webinars, a great Slack community, and so much more. Get $1,000 off the subscription when you click on the link and join with the link down below in the comments section, in the pinned comment, I should say, as well as the description box below the video. So, Chris, my friend, thank you so much for coming on. Guys, if you enjoyed this podcast, drop us a like and comment "Go Chris Go" in the comment section. And subscribe to the channel so you don't miss an episode. And by liking, subscribing, commenting, you help support the channel and growing by boosting us in the algorithm. It may not seem like much, but a little bit certainly does go a long way. And it's free. But if you'd like to take it up a notch and support me monetarily, then you can either join my Substack at capitalcosm.substack.com or click on the link down below, get your discount for Capitalist Exploits Insider. I do get a cut, so you support me, the channel, as well as your portfolio. So that's all I got for you today, guys. I'll catch you later. Bye.
Thanks, folks.